Well, fears of a recession are growing this afternoon as inflation persists despite rising interest rates. On Friday, the Dow fell 486 points for its lowest close of the entire year. This afternoon, our financial expert Paul Hood is here to help us navigate this period of high inflation. Paul, it's good to see you.
You too, man.
Very newsworthy right now. Last week, as you know, the Fed raised interest rates again. It's the 5th time they've done that so far this year. Will we finally start to see some relief from this inflation, and do you see the Fed raising it again even in the next few months?
Well, Jonathan, it's a really difficult situation because inflation is not driven just by one thing. The biggest thing that the government doesn't want you to really think about is inflation is really the devaluing of our dollar and the fact that they have the ability just to print money. I mean, that's the biggest issue because the economy is actually going pretty good. Interest rates, though, are slowing it down. But the biggest driver, at least over the last couple of years, is government spending. They're just printing money, printing. Obviously, the more money that's out in supply, the less it's worth.
Yeah. All right, so we got some viewer questions as well, so we'll get to that like normal. Our first question is from Lori today, and Lori says, I am 10 years away from retirement. I already contribute to my 401k and take full advantage of my employer match. With the market down, is this a good time to increase my 401k contributions, or would it be smarter to put that extra money into a savings account until the market rebounds? Good question.
Well, yeah, I think it's a great question, but it's a really simple answer, Lori. It's if your goal is 10 years from now to own 1,000 cows, and right now the price of cattle is low, you should be excited because you can buy, more today. You can buy 2 for what you could have bought 3 years ago, 1. And so, yeah, you want to, when times are down, is when you want to start slamming in, because what happens is when the market is down, people forget it's going to come up again. When the market's up, they forget it's going to go down again. So you buy when things are on. Everything's on sale right now, so this is a great time to buy.
Buy low, sell high.
That's right.
Yeah. All right, and our second question today is from Jordan. Jordan says, I'm a business owner and I'm wanting to know how I can qualify for the employee retention credit.
Well, I'm glad Jordan asked this because, Jonathan, there is massive, our first question, we talked about the government throwing money into the economy. There is a massive opportunity. If you're an employer and you had employees during 2021, there is a lot of money sitting on the table. The problem is most people don't know about it because when they first came out, they said if you got the PPP loan and got it forgiven, you don't qualify for the employee retention credit. But then they came out and said, yes, you still can qualify for it. So there's a lot of factors that go into it that would qualify a company. But basically, the government is literally paying 70% of wages for all employees up to $10,000 per quarter. So you can get $7,000, $21,000 for an employee back as a refund if you meet certain standards, and the standards are pretty light. So anybody who deals with a CPA, if they don't, give us a call. We'll tell you if you're qualified. But you got to be careful. There's a lot of 1-800 people out there that are filing for them, but every business as employees should be looking into it.
All right, a lot of money there on the table.
Big time.
All right. Paul, thanks. If you have a financial question you would like me to ask Paul next week, you can send them to us at moneymonday@griffin.news. Stay with us. We'll be right back after this break.